Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thanks for making time on this Monday.
Happy to be here.
Well, let's start with stocks in the United States. On Thursday last week, a huge decline, then a smaller drop on Friday. But again, the decline led by tech stocks on the Nasdaq. 6 weeks in a row now that the Dow's been lower. What's the story in the global markets and all this volatility?
Okay, well, as you just said, the U.S. stock market has had a roller coaster of a week. In the same week, it had best and worst days since 2020. So on Wednesday, there was a sharp rise when Fed raised the interest rate only by 0.5 percentage points. On Wednesday, the Dow, S&P, and Nasdaq rose between 2.8 to 3.2%. And then Thursday, there was a sharp fall. It seems that the market just suddenly realized that Fed is going to keep on raising the rates by 0.5 percentage points. So on Thursday, the indices fell between 3.1 to 5%. And Friday, it fell again, but it was much smaller fall. The S&P fell by 0.6%, Nasdaq by 1.4%, and Dow by 0.3%. So just to give an idea on how volatile the entire week was, even though they had a very large rise and very large fall, for the week, Dow only fell by 0.24%, S&P fell by 0.21%, and Nasdaq by minus 1.54%. So the daily changes were much bigger than the weekly changes. As you mentioned, the tech stock was one of the culprits of a falling market, and that's to be expected when the market interest rates are expected to rise. Another big factor was on Friday when U.S. had stronger than expected labor reports. There was 428,000 jobs gained, and so it's a very strong job market still. Unemployment rate was 3.6%, and there were some indications that U.S. was still experiencing shortage of workers, decline of 363,000 in the labor force. So they're still having a job shortage. And the wages are rising on the average by 0.3%. It's a bit slower than where it was in March, but still the wages are rising. So this is giving stronger justification for Fed to keep on raising the interest rates, and that is dampening the mood for stocks. And it's also raising the Treasury yields. 10-year Treasury yields hit 3.13% for the first time since 2018, and U.S. dollar is strengthening against most other currencies. U.S. dollar index gained for the fifth straight week and touched an almost 20-year high, and the market is expected to decline further. Also, the futures before opening, market opening today, Dow went down by minus 1.05%, S&P by minus 1.15%, and Nasdaq by 1.13%. Year to date, Dow has now lost about 10%, S&P by 14%, and Nasdaq is down by about 23%. The European stocks on Friday, they all fell following the United States. Asian market, they are also showing some mixed results. They seem to be following the U.S. Wall Street trends, but Chinese stocks are a bit worse because they're also experiencing a shutdown and lockdown, which is lowering their expected growth rate for the year.
Well, that stronger dollar you mentioned, we see that reflected here in Korea too. Stocks were lower today. The KOSPI down almost 1.3%. The KOSDAQ more than 2.5%. The KOSPI is about at its lowest point so far this year. Tell us about the domestic market.
Okay, well, right now, the market is expected to continue to fall, and like the U.S., a lot of the fall is being led by technology firms and also firms which did well during the pandemic. Streaming companies, online shopping platforms seem to be losing steam. Their number of customers are falling. On the other hand, the so-called mobility stocks, the automobiles or various means of moving, those types of stocks are doing well, and tourism-related stocks are now doing well as well. Automobile stocks may be on the pickup because they're set to do well when interest rates are rising. Today, KOSPI was down by 1.27%. It ended today at 2,610.81. Individual spot, institutions and foreigners sold. Year to date, KOSPI is down 12.7%. And KOSDAQ, they're down 2.6% today. It ended today at 860.43. Individual spot, institutions and foreigners sold. And year to date, they're down by 17%.
Got it. All right, Professor, we're going to have to leave it there for today and catch up again later in the week. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.